Today, we're talking diminished value.
Is that a shot at me?
No. I'm Justin.
And I'm Aaron.
And this is Insurance Hacks, where we use our considerable years of insurance experience to help you hack your way through the increasingly complicated jungle that is modern insurance consumerism. And today, we're talking diminished value, something people talk about a lot.
They do. I've gotten this question many times throughout my career, and it's one of the more confusing areas of insurance and claims.
Right. So before we get too much further, I actually have a question from the internet that you can answer. First, why don't we explain what diminished value is?
Diminished value would be the difference between what your car would be valued at if it had not been in an accident versus what is valued at now. If you were going and looking at used cars, and all things being equal and repaired, you had two vehicles that were more or less the same, except one had been in an accident and one had not ever been in an accident, you're going to find a higher sticker price on the one that has never been in an accident, because it would be foolish to pay the same for one that has been in an accident.
Okay, that's fair.
Yeah.
As usual, we've gone to the internet and scoured it for questions about this. And really, Aaron is right. This is one of the questions I see a ton. So many people want to know about diminished value. So here we go, right from Reddit.
What do we got?
How much diminished value could I get?
No.
Let's not make blanket statements.
Okay,
Let's work through it here, okay?
I'll wait for the facts.
Okay. Hello. Recently, I got into a pretty bad accident where another driver ran a red light and hit me. My car is fully repaired now, but they had to put about $20,000 into the car to repair it. And when I went to a car dealership, I got offered $36,000 for the car, which is worth $50,000. I also went to CarMax and got offered $22,000. I'm wondering, would it be possible to get a good amount of diminished value on the car, like $20,000 to $30,000? The other insurance company is fairly new, I don't know what that means, and the car was a 2021 Toyota Highlander Limited with a decent amount of options added onto it.
Okay. So there's a lot now. Let's dig into that.
Okay.
The beginning is what I really want to point out, because
Okay.
that is one of the most important aspects of diminished value coverage.
Okay.
The poster says that someone hit them and it was their fault.
Okay.
That's the way it's got to be to get diminished value. It has to be a third party at fault accident. Somebody has to have hit you and it's their fault. Typically, you're not going to see your insurance carrier pay out diminished value for an accident that you were at fault in. You were negligent. You were the one who caused the diminished value to happen by having the accident, not paying attention.
Okay.
I suppose it probably has happened. There's hearsay. I've personally never seen it.
I've never seen it either, but there's a lot of states out there and a lot of people and a lot of...
But typically it's going to be a third party. Your insurance carrier is not paying out for an at-fault accident that you caused. Okay, so that's the number one kicker. So this guy has had an accident, somebody else caused it. Mm-hmm. There's been a lot of damage to the vehicle. The damage has now been repaired. Right. If the insurance company sees it, they're done.
Fine. Yep.
Yeah. The adjuster did their job. They paid the claim as it needed to be. It's been repaired all the way.
Okay.
Now he goes to a dealership, and a dealership offers him $36,000 for a $50,000 car, and CarMax offers $22,000 for a $50,000 car.
Right.
That's a big range.
It is.
Why is there such a big range between those two things?
I don't know. Tell me.
Well, it comes down to motivation.
Right.
You think about it. If you're going to go to a dealership, is a dealership in the habit of paying out retail for vehicles that they bring on?
Not my experience.
No, they buy used cars at auctions, so they pay auction prices, wholesale prices.
Right.
They're certainly to get them from the manufacturer at a cost that they can actually make money on.
Right.
So they're going to make money on both sides of that transaction. They're willing to pay you more for your trade-in because then they get to sell it and make money off of it when they sell it to the next guy. And they're not going to give you money for a trade-in if you're not buying the car from them. Right. So they're going to make money on you buying the new vehicle. So it makes a lot of sense that a dealership would offer $36,000, and it makes plenty of sense that CarMax would offer $22,000 because they don't have any strings attached.
Right.
They'll give you $22,000 whether you buy a car from them or not. And they're not going to change that. If you buy a car from them, they'll still give you $22,000.
Right.
Because they're going to make even more money on you then. Right. Because neither the CarMax or the dealership are a non-profit business. Right. They both want to make money.
Right.
So that disparity between those two values makes a lot of sense. And you've got to think about it. Diminished value means the retail value of the car has decreased. The trade-in value of the car is very subjective. It depends on who you're getting that value from.
I guess in that case, the proof is in the pudding. If you actually have to sell the car and get less than you were going to sell it. If we think about it, the easiest way to prove that would be I had an offer for $45,000 from Joe, and now he'll offer me $40,000.
That is what makes a diminished value claim so tough, because it is very subjective.
And it's subject to the market.
It is a subject of market. It could change by the day. Okay, so what's the next part of the question?
Could I get a good amount of diminished value on the car, like $20,000 to $30,000?
Look, I'm not going to say no, because somebody advised me that I shouldn't speak in absolutes. So I'll say probably not. That's a big ask.
That's a lot.
Yeah, and it's based on your idea that the vehicle is worth $50,000 retail, but
Right.
you've been given offers of only $22,000 trade-in, which
Right.
are two different numbers. That's apples and oranges right there.
Right.
Now, can you get it? I won't say no, but I will say probably not. And if you do end up getting $30,000 for your diminished value claim, you have a lot of patience.
You bet.
Because that is a long road to hoe there.
You bet.
It's not the adjuster who figured out your total loss and paid you out for the value of your car that's going to adjust this diminished value. It's another department. And if I had to guess, I think that department's like in the basement of the insurance carrier in the dark.
They keep them chained up for sure. Now, to this person's question, ultimately, they stand a better chance of recovering something because it is a car that has a great deal of value, period.
Again, we're pretty subjective here. I mean,
Right.
it's a newer Toyota Highlander, but they made a lot of Toyota Highlanders.
Also true.
And people drive the heck out of Toyota Highlanders too.
Yeah.
So, I mean, you could see a one-year-old Toyota with 30,000 miles on it.
Sure.
So that's the thing, is there's just a ton of them. It's not a collectible type of vehicle. If you were going to get paid out that kind of value for something exotic, a Porsche, a Lamborghini, something
That's going to be a lot easier because those are different marketplace cars. I also want to mention that, while a Highlander is not special, I've had people ask me, hey, I have a $7,000 15-year-old Malibu. Can I get diminished value on it? And the answer there, I will make a blanket statement. No.
Yeah, because you cannot get diminished value if the car is too old. It has to be a later model vehicle.
Right.
So I don't know the exact year of cutoff, but
Right.
after a certain amount of years, and I'll say probably somewhere around the 10 range, you're not eligible for diminished value at all.
It's just a car at that point.
Yeah.
So there's a lot of nuance to this, obviously. And really, there's a lot on you as a consumer to have to prove this because the insurance companies aren't bursting out of the box to pay you more than what they've already paid you.
And keep in mind who you're working with. You always have to know your audience, right?
Right.
You're dealing with a third-party liability claim. So you're talking about an insurance carrier who you don't pay money to every month.
They don't owe you nothing.
They don't have a contract with you. They have a contract with their insured. And once you've entered the claim process and taken their first of their money, you've already signed a release that says that you're happy with all of the with what they're going to pay you for these losses.
Right.
So you're really at a disadvantage right from the very beginning. And what can you do about it? Well, you can go online, you can shout it from the internets, let everybody know how terrible this insurance company is whose client hit you and then they didn't pay you everything to get you back to 100%. But you're in an echo chamber like nobody's business.
Right.
I mean, the internet is riddled with reviews of insurance companies from people who didn't get paid what they felt they deserved from that insurance company. Plenty of them from the insurance company that they were paying money to, but there's probably 2 or 3 times as many that are about insurance carriers like this situation where they're insured hit somebody and the person's just not happy with what they're paying out. So it really is, it's something you got to pack your patience for. You got to be prepared to present your facts, and you got to subtract all emotions from this. You have to be very professional in providing your case, almost like a lawyer.
Right. Well, I also want to point out, as we have with some of these, that this person went to the great wide internet to ask their question. Having a good advisor in their pocket would make all the difference in the world, because when it comes to insurance, there are people out there who spend their days thinking, doing, working in insurance.
Yeah, there's people who sit there and make videos put online about insurance. They think about it so much.
I would argue pretty good ones too, you know. So go find those people and ask them questions and establish a relationship with someone who is involved in this industry. I don't know what you do, but I'm going to be Mr. Rogers and say, I bet you're great at it. Do you really want to be great at insurance? Find an agent. Find someone that you can work with that can give you the kind of guidance to help you answer these questions. No, an agent can't get you diminished value, but a good agent can guide you through all of that process and help you decide whether it's even worth attempting it or not.
Yeah, absolutely. So I hope this helped you out. If you have any questions about diminished value that we didn't cover already, put them in the comments section below. We'll definitely reply to those. If there's anything specific we can expand on, we'll make another video for you. But please like, share, subscribe, and then come back and see us next time.
Thanks for asking.
The Phoenix Insurance for you.